I said, can you fight the Fed? I mean, is that?
No, you can't fight the Fed.
It feels like that's the story. You're either going to fight the Fed or not. So what do you do?
No, you can, listen. I think it's pretty clear you can't fight the Fed. So the Fed's balance sheet's gone from $4 trillion to $7 trillion, and I think for the bears, it looked like things might have been coming your way last week with the 1,800 point decline in the Dow. And earlier this week, things seemed to be going your way. And then the Fed came out and said that it was actually going to buy corporate, not just ETFs, but its own basket of corporate bonds. And it was pretty much that set the tone for the rest of the week. So it seems clear that the Fed is all in.
So, but Jason, here's the question. In terms of what you buy at this point, because there were a lot of people trying to pile into some of the travel stocks and some of the what had been unloved stocks. And while you can make the argument you can't fight the Fed, COVID-19 unfortunately continues to spread, and there continues to be real questions about the health risks and whether we're going to get a second wave or whatnot. And so the question becomes, if you're going to be in this market, how do you be in this market?
Yeah, I have to say it depends on your time horizon, because everything is going to look like a V for the next couple of months, just because you're coming from such a low base. There's going to be a tendency to want to go into the value, more cyclical parts of the market. I think if you have a longer term time horizon than a couple of months, you want to be careful, because I personally, I think, in my opinion, the black swan isn't the virus. It was the lockdown, which I think did a very serious damage to the economy, particularly to small businesses. That's going to take a long time to repair. So I have more of a bias towards growth stocks, technology, communications, healthcare. In my view, that's a better place to be for the long term over the next couple of years. Now, there are policies we can do to quicken the point at which we get back to the level of economic activity and earnings that we saw in 2019. But in the absence of those things, I think it's going to be a slow road back.
Would you buy anything outside of the United States right now?
Not on a long-term basis. Again, as a trade, Europe looks interesting because they're actually providing stimulus, and they're doing things to shore up what was clearly some sort of rupture, I think, in the relationships between the northern countries and the southern countries in the aftermath of COVID. So Europe, there are clearly values there, but I've learned the hard way over time that there's a reason why they're cheap. And that's largely because their economic policies are set up. You don't have recessions that are that deep, but you also don't have many expansions, and you don't have the innovation that you see in the United States. So Europe might be interesting. Emerging markets in the short term, in my opinion, will clearly move with some of the cyclical stocks as things start to reopen. But again, I would fade that as you get into the fourth quarter.